Hello, and welcome back to Coin Lady channel. The 96 million XRP that have been sitting in reserves are finally going to be released in 2023. With the removal of 240 million XRP tokens from its main account, it is clear that Ripple takes its screwed XRP reserve seriously. Approximately 96 million XRP, or about $59 million, will be available in the Ripple primary spending wallet once the transaction is finalized. By moving tokens and reducing the possibility of price fluctuations, Ripple hopes to stabilize the XRP market with its current strategy. Before the ETF token for Bitcoin sells out and the introduction of the ETF, Ripple, the company behind the XRP cryptocurrency, has finished a crucial transaction involving its escrowed XR assets, and the $4 million have been raised. As part of its ongoing strategy to manage its large XRP holdings, Ripple has taken this step, which has caused some friction in the cryptocurrency community about the possible market effects of this decision. The move of XRP by the Ripple firm, a major milestone in the company's systematic approach to the distribution and sale of escrow XRP currencies, was the transfer of 240 million XRP tokens from Ripple's primary account. Ripple is simply the name for this wallet. This deal is a part of Ripple's bigger plan to make the XRP investment market more stable. Thanks to this deal, with the current market price of 0.62% for XRP, the projected value of the approximately 96 million XRP held in Ripple's main spinning wallet is around $59 million. Based on their projections, analysts do not expect a Ripple sell-off to significantly impact the current price dynamics of XRP. This is so even though Ripple has a substantial reserve of 40 billion XRP tokens held in escrow, which means that a lot more tokens are entering the market. The company's XRP reserve management practices are always a point of interest. In addition, the constantly distributed XRP will be unlocked by Ripple in stages until the relocking in 2027. The cryptocurrency community is closely monitoring the movements of XRP due to the company's deliberate and strategic approach to market responses and future projections. This is particularly evident in light of the substantial withdrawal of XRP tokens from the Binance exchange. Some are questioning the motives behind this transaction, which entails transferring XRP worth $86 million to a new wallet. After reaching a high of 69 cents in early December, this could mean that major investors are shifting to self-custody or are transferring their shares to a different exchange. Since then, the XRP price has been relatively stable at 623 cents. Plus, the cryptocurrency's price has been relatively flat recently, so this latest development is all the more surprising. The potential repercussions of Ripple selling off its remaining XRP holdings have market watchers speculating. There would be even more unpredictability for holders and investors in the Bitcoin market if this kind of action affected its price. A timely reminder of the complexity of token management and its impact on the cryptocurrency market has been provided by recent events with XRP Reserve. Many in the Asian market are hoping that this exchange-traded fund will be the first XRP location. This excitement is due to the fact that Ripple's VP of Global Policy recently stated that a big US retailer would embrace cryptocurrency in 2024. We will also look into the prospect of destroying Ripple's escrow wallet and the 39 billion XRP it contains. Finally, according to a recent court filing by prominent XRP backers, including the creator of Dreadful Capital, Ripple Singapore may have the opportunity to acquire a large number of FTX assets valued at over $1 million. This comes after the XRP market had some disappointing movement, which would have discouraged many enthusiastic investors. Once price breaks through the local trendline barrier, it often falls into a bull trap, as seen in this particular movement. For traders hoping for a long-term uptrend, the XRP USD chart's misleading positive signal has been a source of consternation. When a falling price continues to break over a significant resistance level, indicating the start of an upward trend, a bull trap forms. Unfortunately, instead of continuing its upward trajectory, the price falls back below the level of resistance and fails to move or maintain the breakout. When it comes to the short-term performance of an asset's price, this false signal encourages buyers to buy since they mistakenly think the market is going positive. However, as the market corrects and the price keeps falling, the fallout from a bull trap is usually unfavorable. Many times, traders who invested during the false breakout end up selling at a loss before the market gets back on track. This selling pressure might make the downward trend even more noticeable, leading to a steeper price drop. Take XRP as an example. Some may have taken the price's inability to stay above the trend line as a bullish indication. However, it has quickly transformed into a prime illustration of a bull trap situation. The market's optimistic sentiment could become negative as a result of this event, as investors lose faith in the market and traders may become more cautious as a result of the failed breakout. To add insult to injury, this is happening even though the market is typically trending upwards, RLS greater than 50. The bull trap's negative ramifications cannot be ignored by this alone. Whenever the R-score is higher than 50, this can be a sign that the market is experiencing some upbeat sentiment. However, one could equally see this as a warning that the market is getting too hot and that a correction is imminent within the context of a bull trap. A bull trap and relative strength index, RSI, more than 50 on the XRP chart would suggest the market isn't as strong as it seems. In the near future, traders may be patient and wait for prices to find new support levels before thinking about getting back into the market. Yesterday, news broke that MicroStrategy, headed by CEO Michael Saylor, had spent an astounding $615.07 million to buy 14,620 more bitcoins. The centerpiece of this significant buy is the December sales ambitious aim, which was characterized by Max Keiser, a famous Bitcoin advocate, and which cost an average of $42,110. Keiser, who also happens to be an advisor to El Salvador's president, claims that the company could own up to 5% of all bitcoins in circulation thanks to its collateral seesaw strategy, which involves issuing both stocks and debt, along with selective bitcoin purchases. The astronomical equivalent of 1.5 million bitcoin would be these sums. We can see that Saylor is hell-bent on having more bitcoin than Satoshi. Here we have my Mr. Additionally, I hold bitcoin. Regardless of whether someone thinks it's improved, I am unable to make a complaint at this moment as a shareholder. The fearless chase of cryptocurrency by sailors was discussed by John Dennen, a prominent attorney and legal representative of XRP and investors. MicroStrategy is clearly intent on amassing more Bitcoin than Satoshi could ever dream of, according to Deaton, who has a stake in both MicroStrategy and Bitcoin. It was the attorney's conviction in the Saylor scheme that he stressed. He was quite clear that the careless attitude does not bother him in the least. Despite differing opinions, Satoshi made a request to try and catch up to Satoshi Nakamoto. MicroStrategy has done well. Their total Bitcoin holdings are now at 189,150 BTC, worth an astonishing $8.15 billion. This puts them in competition with Nakamoto, who is thought to have the most Bitcoin at 1.1 million BTC, or $47.03 billion at today's prices. Trading advice should not be construed from the data that has been supplied. You should not put your money into anything that relies on the data presented here, prior to settling on an investment strategy. In addition to talking with an expert, we highly recommend doing your own research. And please like and subscribe my channel. See you later, bye.